Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. My forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. And I think markets are already showing you how excited they are about this idea, because we've just gone through a ridiculous rate cycle, kind of an unprecedented rate cycle on the back of the unprecedented inflation.
We step into a world of financial intrigue and dynamic market forces, guided by Real Vision's CEO Raoul Pal's latest predictions. Pal, a seasoned investor, cast a spotlight on Bitcoin and the expansive cryptocurrency market, emphasizing their significance amid economic uncertainty. Urgency pervades as he addresses mounting concerns surrounding the colossal $6 trillion debt maturation scheduled by year-end. Pal delves into economic indicators, debt dynamics, and the pivotal role of central banks in shaping the market. He highlights the Federal Reserve's steadfast commitment to maintaining interest rates amidst mounting inflation and debt pressures. This commitment, part of a higher-for-longer approach, stands as a cornerstone in the current economic narrative, seeking a delicate balance between taming inflation and upholding economic pillars. In the latter part of the year, Pal explores the ripple effects across the investment landscape. The interview delves into how Bitcoin and cryptocurrency are reshaping the very fabric of finance, becoming transformative forces with far-reaching implications. As we journey through Pal's insights, we witness the evolving landscape where these digital assets play a central role in shaping the future of the financial world. DailyDoseCrypto Challenge. Win $1,000 of Bitcoin. Simply subscribe to our channel, like this video, comment below how much you think Bitcoin price will be on January 1st, 2024. Winner will be announced January 1st, 2024, 6 p.m. GMT time. Good luck.
When you divide, for example, the S&P 500 or gold or real estate by the Fed balance sheet, they've been flat since 2008. And I discovered within that process that only two assets actually have risen versus the debasement of currency. That was technology stocks and crypto. Both were in secular uptrends. So this, like clockwork business cycle, which is based around the debt refi cycle, happens to be exactly the same as the US election cycle. It also happens to be exactly the same as the Bitcoin halving cycle. So all of these cycles are at the same time every time. So here we are today. Today, we're at the bottom of the business cycle. This is the kind of recessionary era. Businesses are laying off staff. Inflation is starting to fall sharply. The forward-looking markets, technology and crypto, priced in a recession last year. And they've been recovering since because they've been following the forward-looking indicators of financial conditions and other things. Right now, stuff like the Russell 2000 and oil is living in the present day, which is slow economy. So they're at their lows. And everyone's like, what the hell is going on? Why are these tech stocks going up and everything else is going down? It's because they're forward-looking, as it is their job. So I've been very bullish. I saw the liquidity cycle, which is the key driver of all assets. The liquidity cycle is based around this interest rate cycle, which is based around this whole debt refi cycle. Liquidity started bottoming last year in October, November, December. And that gave us the signal to start getting long both crypto and technology. And that's been, phenomenally good. I mean, this year, the Nasdaq's up 45% and crypto is anywhere between 80 and 500% this year. And that's got people scratching their heads. But our forward-looking indicators of the business cycle suggest we're going into what is, right now we're in macro spring. That's when the weather kind of gets warmer every day, but sometimes it's raining and sometimes you've got a frost and other times it's hot and you're like, it's always confusing. That's macro spring. We're about to start moving towards macro summer. What is macro summer? Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. That's the kind of holy grail for macro and for investing. And we should be in macro summer for all of 2024 and into 2025. And so my forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. And I think the markets are already showing you how excited they are about this idea, because we've just gone through a ridiculous rate cycle, kind of an unprecedented rate cycle on the back of the unprecedented inflation. That inflation I think was just driven by the pandemic. If you shut down, all demand and shut down all supply and then bring it all back on at the same point, you create chaos. Exactly the same happened after World War II. After World War II, suddenly everyone came back into the labor force and factories had to retool from making munitions to making cars and washing machines and whatever. And we got a massive inflation then. But then what happened is it worked its way through and we just had strong growth going forward. So we've still got the problem remaining of that GDP formula. How do we pay for this bloody debt? Because it keeps going up. The higher interest rates go, the more bonds they have to issue, which is why I think they want to bring interest rates much lower than people expect by being so late in hiking, so they can undershoot and have the cover to paper over the cracks in the system yet again. And they'll use like the commercial real estate and the banks as one of the excuses to do it, to start using the balance sheet. But we've still got the problems with the economy, is it's not growing fast enough to pay the interest on the debt. So if the economy on average is growing at 1.75%, and let's say interest payments on debt is about 2%, and the government's 100% of GDP in debt, that's all of GDP just to pay the debt.
Raoul expresses the belief that the increasing money supply, coupled with the government's quantitative easing, has led to widespread malinvestment and significant inflation. He contends that although Americans may have initially benefited from the influx of money, the rest of the world did not share in these gains. Raoul argues that banks are striving to achieve interest rate neutrality without causing irreparable harm to the global economy. Meanwhile, investors are speculating that tightening financial and credit conditions for households and businesses will likely exert downward pressure on economic activity. Raoul examines forthcoming economic indicators related to inflation, the stock market, and the potential influence of cryptocurrencies on the global monetary system.
Crypto side has been, outside of AI, the fastest adoption of any technology in all of humanity. It has been following a perfect log trend. And what was staggering is last year, the number of active wallets in crypto grew 42% in a year when the market went down 80%. That's like, oh my God. We're now at 516 million users. By the end of 2030, we'll be well over 1 billion users, maybe 2 billion users. So it is a very prevalent technology. And it's happening this cycle everywhere, kind of everything everywhere all at once. The banks are using it. They're already trying to settle securities on it. They're using it for payment systems. We're seeing Visa using it for payment systems. We're seeing mega brands like Mercedes-Benz or Starbucks using Web3 NFTs. We're seeing Hermes, LVMH as a broader company adopting this. We are seeing ongoing adoption globally of cryptocurrency as an investment vehicle. We're seeing the institutions investing in it. I've had on my show Texas teachers, they were pioneers in the space. We've had Franklin Templeton, Fidelity. These are big companies. Now we've got BlackRock. So what is going on here? Here's a nice way of framing all of this. And it makes it easier for people who are kind of crypto cynical or don't really understand it. We have two worlds. We talked about this before. We have the physical world that we live in, your world of North Carolina, or my world of the Cayman Islands. And then we've got the digital communities that we live in. The crypto land and fiat world are these two worlds. We've talked about GDP is slow in fiat world because of aging populations, debt, and lack of productivity. But over in crypto land, the population's growing at 42% a year in a year when the economy went down 80%. You've got productivity improvements as new uses of blockchain technology get introduced every day. And you've just wiped out the debt from the previous cycle. So you have an extremely fast-growing emerging market. And what happens is you're now seeing fiat world participants set up offices in crypto land. Franklin Templeton, Fiat, Franklin Templeton, Fidelity, TRS, they're setting up offices there. So we love this place. We think it's a dynamic economy. We want to build stuff here. Then the ETF comes along. The ETF people need to think of as a trade deal between fiat world and crypto land. So it's a trade deal to allow capital to flow into this other economy. And as that economy crypto land grows fast, a lot of money's going to go down through this pipe of the trade deal, which is the ETFs, and then will flourish within that economy. So we're seeing this giant sucking sound of people seeing this economy. It's much like when China came onto the world stage. Is everybody flooded there? Everyone put their capital there. Everyone built offices there because they could see the big opportunity. Well, this is the fastest growing economy we've ever witnessed. It just happens to be a digital one. It has its own system of currency, its own interest rates and central bank policy. It has a financial system, which is DeFi. It has states like Bitcoin, Ethereum, Solana, whatever it may be. These are states within crypto land, and those have different policies. We have taxation systems within crypto land. We have assets, NFTs, within crypto land. And it's just because they've all been more attractive over time, it's sucking in more and more of fiat world into it. And eventually, I think it basically subsumes fiat world.
Raoul unveils the potential for shifts in cryptocurrencies to create far-reaching effects on our finances. Envision a scenario where borrowing money becomes costlier, impacting the attractiveness of credit card deals and car leases. It transcends mere numbers, touching upon fairness and the extent of our purchasing power amid market dynamics. Within the cacophony of the market, Bitcoin emerges as a disruptor, challenging established financial traditions. Pell underscores the concept that the everything code implies money as an invisible thread interconnecting all aspects. He posits that major banks act as guardians of balance, working behind the scenes to maintain stability and avert financial chaos. However, Pell foresees an inevitable shift on the horizon. Share your thoughts on the recent interview with Raoul Pell. How do you anticipate his predictions for Bitcoin, cryptocurrencies, and the financial market unfolding in the latter part of 2023? Feel free to comment below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.